I think that really showed the space that like as long as you don't force the term blockchain onto people's heads, it's all fine. Just like Robinhood doesn't force it onto my screen that they're using MongoDB as a centralized database on the back end. And they're like a payment for order flow consumer app for trading stocks. So nobody says that. It's a weird thing to say. And so I think like as long as you don't force those terms down the consumer's throat and you provide real value by abstracting away like the underlying infrastructure, which in this case is a blockchain, but in other cases it could be a centralized database like MongoDB. I think like that's the biggest thing that's holding adoption back.
Hi everyone, I'm Marina from the Newforum team, and I'm excited to bring you another episode of Newforum. Newforum is the community for purpose-driven visionaries, creators, developers, and investors with the goal to spark conversations on the topics of blockchain, the metaverse, NFTs, and everything Web3. And today we have a wonderful guest speaker, Harsehaj Singh from Pantera Capital, a blockchain-focused venture capital firm. Harsehaj is an ex-M&A investment banking analyst turned venture investor. And Harsehaj, it would be great to know about your background. Tell us your story. How did you get into Web3?
Awesome. Thanks so much for having me, Marina. And yeah, I think you summarized most of it. I think the only thing I'll add is some backstory and some context. Originally, I'm from India, North India. I came to the US 6 years ago. Went to UC Berkeley for my undergraduate, went to the business school there, graduated in 2020. I kind of never knew what I wanted to do in life professionally. So I always dabbled in college across a lot of different sectors and a lot of different focus areas and verticals. So I worked at startups, worked in publishing, which is super random, worked in finance, in investment banking, obviously at Lazard, where I went full-time after college, worked at PayPal as a summer analyst on the marketing team. So I was definitely all over the place, and I knew that being a generalist is my superpower. And as soon as I came to realize that, I knew that, I wanted to be a generalist, but I also sort of liked finance. And I think that's what led me to sort of investment banking as a career path to begin with. At Lazard, I focused on technology M&A, and I got my first taste of what it means to be a businessman in gaming in a way, where I got to work on Sony acquiring Bungie, the makers of Halo, which a lot of people, have played on the Xbox franchise. And from there, I sort of got interested in gaming and investing, but still was not super interested or involved in crypto. The only time I used crypto was in 2017, randomly when I made a Coinbase account to buy a fake license in college so I could get drinks in the bar. This is off the record. Please don't use it against me. And then after Lazard, what ended up happening is that towards my last few months, I wanted to trade stocks. This is during the pandemic, and everything was booming. I wanted to sort of obviously be a part of that revolution, buy some meme coins, etc. But I couldn't do that being a part of an investment bank from a compliance perspective. And so when I asked my team what I can buy, they said you can buy crypto and all the crypto you want to. And so this was the random story of why I got into blockchain. I just bought a bunch of Ethereum because I had no other options to buy really. And after buying, obviously I dug in, went under the rabbit hole, and used my first application on chain, which is Aave, to lend my Ethereum to someone else. And I was like, wow, like I can lend my Ethereum to someone else. There's no middleman. Like that doesn't make sense. Let me dig deeper. And like before I knew it, I was doing crypto every night, basically on the side. My job would end at 11 p.m. and I would sort of spend 2 hours from 11 to 1, night over night, reading docs, basically being a degen. And like one day it just struck me, I'm spending 2 hours every day. Like, why don't I just do this full time? And that's when I decided to sort of make the move to crypto, started working at Illuvium, and a bunch of other DAOs. And then sort of Pantera reached out, and, it was just a great conversation. Loved the team and the energy, and realized that I can combine my generalist sort of skill set while being in finance and crypto.
This is fascinating. Thank you for the story. And yeah, great. I mean, a lot of us came into crypto by actually starting something, playing with the currencies, or starting to invest in cryptocurrencies. And then we saw how much potential this Web3 ecosystem has, and what an amazing technology actually blockchain is. And so that's why we are also doing this podcast, actually, to show all the rest of the people why is it so cool and how innovative the whole Web3 world is. So yeah, and I'm curious because we are in a bear market, obviously, and it's interesting to know what is Pantera Capital is looking into in terms of investment these days. What startups are you looking to invest?
I think there's a lot of good investment opportunities out there. And I think historically, Pantera has been investing in the space since 2013. And all of our investments have, or most of our investments have been pretty focused and concentrated on DeFi as well as sort of infrastructure. By infrastructure, I mean, L1s, L2s, but also like NFT marketplaces, wallets, as well as sort of developer tooling, like node infrastructure. And so we continue to be specialists in that area while opening up our minds to sort of the new landscape, which is consumer. But I think in the past 6 months, if I think about what we've invested in the ones that have been publicly announced, Obol, which is basically a DVT platform that helps reduce the losses from staking and helps sort of distribute the responsibilities of a node into multiple nodes, thus making sort of node staking more decentralized. Because, right now, centralization in ETH staking is a big concern. Like Coinbase and Lido have a lot of stake, but, DVT decentralizes that process. We've also invested in a company called M0, which is basically a new stablecoin on the block, a new kid on the block, building a decentralized stablecoin, obviously backed by fiat, backed by USDC and any other on-chain stables. But what it allows you to do is that it can allow you to passively get the yield from the US Treasury, which is about 4% right now, while being composable with all the DeFi primitives. So imagine like swapping into your favorite crypto, and then when you swap out into that stablecoin, you're getting 4% yield on chain. So like, I think we're investing into stablecoins, infrastructure, DeFi as well, some unannounced deals that are super exciting. But we continue to look for like the frontier, which can be consumer, and it should be consumer in my view in the next sort of couple of years.
Yeah, absolutely. And a lot of our discussion will be around this consumer kind of challenges, I guess. I wanted to dive into your work, and I found your letter that you has written for Pantera Capital, or it's a blog, I guess. And yeah, you were talking about Axie Infinity illustration for NFTs. So it was really the revenues and prices that we see there. Could you elaborate a little bit on that for our listeners so they understand what we're talking about? But also, I think it's really interesting to know what are the lessons that we can learn from the success and subsequent decline of Axie Infinity, and how can actually Web3 games make the economies more sustainable, I guess. So yeah, would be great to know.
Yeah, for sure. I think like before I answer that question, I would love to backdrop, give some context on how we as a VC like look at the space. And I think, as I said, like crypto has always been in this phase of like, let's invest in infrastructure, because everything that's decentralized, the problems get multiplied by 1,000, right? And so you have to build infrastructure that accounts for those problems. But I think like right now we're at a phase where we have like 10 L2s, we have, 25 bridges, we have, so many like different players who are like actually doing a good job of like node infrastructure that we actually can focus on building a consumer app to begin with. That's why, we've been diving deeper, and you read my letter. But for us, like the past 2 years were a way to experiment into gaming, into sort of NFTs. We didn't invest from a fund size perspective too much money into any of these categories, but definitely for us, like investing even a small amount was a way to learn and document more about the space before we go all in. And, it's been a great journey. So I'll just say that. But to your question about sort of Axie Infinity specifically, I think like what I mentioned in the newsletter is that there shouldn't be a correlation between the prices of in-game items and the number of players who are playing the game on a daily basis. There should be a positive correlation, obviously, but not a one-to-one correlation where like prices drop, the players also churn, or like prices increase, the players also increase. I think like that's something that was a feature of like a very early stage Web3 game that was considered to be a vast improvement, but it turned out to be sort of a Ponzi scheme, really, if you think about it at the core level. And so the biggest learning from, I think, Axie has been that in 2020 and 2021, a lot of like Web3 investors who focused traditionally on infrastructure started investing into games. And the reason for that is that just adding a token or adding Web3 elements to a game made it seem like an infrastructure investment. It made it seem like a differentiated investment from a classic regular game. But when you think about it now, with the curtains have been drawn, every investor is seeing games for what they are. Like they're games, right? You have to evaluate them as like fun, playable digital worlds. And like the existence of NFTs and tokens in these worlds can make the game better, but it doesn't make it a differentiated game. And so I think that's the biggest learning here, that like to make games sustainable, you clearly have to have like inflows that match outflows. You can't just sort of have a free lunch where like, tokens are being created out of thin air. And tokens are not always a growth marketing tactic. They can be if used carefully. They're almost like a weapon in a studio's arsenal, but they're not a differentiated infrastructure offering for any game anymore.
And so I imagine that this was also kind of the evolution of how investors started to look into games. You started to talk about it a little bit. So first of all, they were interested in the games because they kind of like claimed they are a blockchain game. But how is it happening now in the recent kind of years? Like what investors are really looking in the games to actually put money into them?
Yeah, so I think compared to like the peak of last year, obviously funding for Web3 gaming studios has gone down a fair bit. And I think the reason for that is it's still there, it's positive, but it's gone down, and it's in line with sort of how traditional free-to-play studios are getting funded, which makes more sense because what a lot of Web3 gaming studios are doing now is they're basically a free-to-play studio that's going to build a mobile app on the App Store, but they're going to have NFTs. And Apple is going to take 30% cut off any in-app NFT sales. So what they're going to end up doing is that they're going to have a way for players to buy the NFTs directly from the publisher or from the studio, but then also have a secondary marketplace where these NFTs can be traded. And Apple either way gets a 30% cut given they're the platform. And so I think like given that they're moving towards now more a free-to-play model where you just have NFTs with free-to-play, investors are evaluating them like a free-to-play studio. And the token is almost like, sort of that added upside by investing in that game. But again, the value of like the token itself has gone down for any gaming studio, because if you're building a free-to-play studio with NFTs that are layered in, the equity goes up, right? The token value goes down. Versus in an Axie-like setting where everything is decentralized and it's all tokens, it's all value to the token, So yeah, I think that's what's changed. And I think the last thing I'd say is that obviously, look, most of Web3 investors are not gaming investors. They don't have a view on like content and what content will do well. And their view on sort of blockchains has become less important because blockchains have become more abstracted away in all of these games. And that's sort of the lesson. They have to be abstracted away. They can't be in your face. Not all gamers want to stake their tokens. Not all gamers care about staking or burning or minting. They just want to play a good game. And if their collectible can be sold on a marketplace, they can make some extra cash. Like, why not? That's great. So I think those are the two things that have changed in the recent regime.
That's amazing. So these are the trends then in the games industry, right? You said free to play, or is it the same as free to own, I imagine, model, right?
I think like free to own or like play to own is like a model that was pioneered by a gaming studio called Limit Break in the past sort of 1 year. And the model involves like giving away NFTs for free. And so rather than having people pay for a primary mint and generating sales from that, you just give NFTs for free to players who then become your core evangelists. And in order to get these NFTs for free, you have to be super active in the community. You have to be one of the top contributors of the game. You have to sort of be very active with the team. And like that shows that, these people are really, they're worth giving the NFT away for free because they will make the NFT go viral versus having people pay and then sort of having to maintain a floor price, having to sort of have a financial link involved. And so I think like that basically Limit Break like disrupted how marketing works using NFTs in a way. And we can expect, the market to be flooded by all kinds of gaming NFTs. And only the games that are truly good and the communities are truly viral will have the NFTs take off versus like in 2021 where everyone could sell an NFT and like make money.
Yeah, I can totally see that actually working not just in the gaming industry, but also in other like blockchain focus now, where the fashion industry now also getting into blockchain quite a lot. For example, and it can be applicable just for influencers or the customers who are really, really good customers. So it's interesting. And you obviously also have seen quite a lot of other examples of how blockchain was used by bigger brands, I guess, not just games. I know that you're looking into the consumer market, so it would be interesting to dive a little bit deeper into that. It feels like in the past year or in the past like cycle of blockchain, it's been quite a big hype around metaverse, but actually we now kind of past it, I don't know if you feel the same or if you see the market is like that right now, but it would be interesting also to know, how do you see the major brands such as Nike, Gucci using NFTs and blockchain technology to engage with the audiences? And what impact will this have on the future of digital experiences?
Yeah, I think so to your first point, I think there's a very good article. I forget who published it, but it's called "The Metaverse is Very Lonely," right? Because they basically like, making a joke about how all the big metaverse like sort of platforms like Sandbox or Decentraland, they only have like 100 or like 1,000 daily active users actually roaming around in these worlds, and yet they have like so much supply of land and like all the stuff that's been created, and no one is coming there, right? So it is pretty funny. But I think like if you like zoom out and like break down the word itself, like metaverse, like it just basically literally means like a digital state of like immersiveness, right? And so you can apply the term broadly to like games, digital experiences, digitally native apps where you have an economic vest, right, in the success of the app or things like that. So I think if you zoom out, the function still works, right? In terms of sort of what big brands are doing now in the space, I think there's a couple of things, but I think it all boils down to two main things. One is like, how do we deepen engagement with our community, and how do we deepen loyalty with our community? And so like everything you do that brands are doing centers around these two things. And like a very specific example of that is Starbucks' loyalty program. The first question is like, why build what's broken in the loyalty program today? Like what's there to fix? And I think like I spoke to Starbucks about this, and their reasoning was that by using Web3, you can inherently create a loyalty program that's global in nature. So anyone in the world, and not just US customers, can get the same collectible by drinking the same amount of coffee or making the same amount of purchases versus sort of a US customer. So it sort of levels the playing field in terms of engagement across the globe. That's one thing. The second is, the global settlement and global interactions. Anyone can sell that collectible to each other across countries. Anyone can show it off on their Starbucks profile as a badge of honor. And you now have this community of curators who are basically so deep in like not just drinking coffee, but also collecting Starbucks's footprint on the internet, that you can have them sort of, meet each other and create this global community. So I think that's how Starbucks is thinking about it. And then moving on to sort of Nike and some other brands, I think Nike just made a platform called .swoosh. And basically that's an extension of their Nike app, where basically you can, like, instead of buying shoes, you're now buying digital shoes, right? And again, like it's one of those things where it's a way to sort of deepen engagement, and the best, most loyal Nike fans will collect all of them, right? And have it as a badge of honor. And in return, they can get, sort of exclusive Nike merch, exclusive, experiences. They can sign up for, shoe drops before anyone else. Just yesterday, Nike dropped a digital version of the Air Force Ones, which is a shoe I really like. So I might get it, even though I'm not a shoe collector, but I just have a wallet, so I might as well. So I think it's one of those things where like it really boils down to like deepening engagement and loyalty, and like that's where we're seeing the market going, rather than like, let's create a metaverse where no one will come and like it's useless,
Yeah, it's really fascinating to see all these efforts that brands are doing to engage their consumers, really, isn't it? And so you mentioned also before that you are very optimistic, and you said that despite the year 2022 that was pretty rocky, consumer adoption of blockchains will remain steady, and this is what we're really trying to achieve, all of us, really, the adoption of blockchain. We spoke a little bit about that, but maybe it's interesting to also talk a little about the challenges. What do you see will be the challenge to do that actually for the brands, to make all the blockchain technology more transparent and accessible to their users?
I think about this a lot because as a consumer, I like think about like, what is the killer use case that I will like download a blockchain app for? And I think like there is no one killer use case. I think like the use case is just like, again, like ownership and sort of settlement on the internet, right? Which is in itself a massive thing, but you can't boil it down to one specific challenge, right? The challenge is like, I think in my view, if I did have to boil it down to one specific challenge, it would be UI UX and abstraction. And so like, if you think about like Reddit and what they've done for the space, everyone on Reddit hates NFTs. Like if you look at Reddit's community and you sort of tell them, oh, like I'm minting an NFT, or like here's an NFT that I bought, they will hate you for it, right? They will ostracize you for it. But then surprisingly, when NFT launched its own digital collectibles, it now has about 7 million new collectibles and new wallets that were created in a matter of like 6 months. which is more than like the daily active wallets on OpenSea or even the monthly active wallets on OpenSea. So I think like that really showed the space that like as long as you don't force the term blockchain onto people's heads, it's all fine. Just like Robinhood doesn't force it onto my screen that they're using MongoDB as a centralized database on the back end. And they're like a payment for order flow consumer app for trading stocks. Right? Nobody says that. It's a weird thing to say. And so I think like as long as you don't force those terms down the consumer's throat and you provide real value by abstracting away like the underlying infrastructure, which in this case is a blockchain, but in other cases it could be a centralized database like MongoDB. I think like that's the biggest thing that's holding adoption back. I think the second thing would be regulation, but obviously I am no lawyer and I don't want to comment on that. I think like over time things will clear themselves up in that regard.
Yeah, absolutely. But I wonder if you think that, you was talking a little bit about that as well in your newsletter about the innovation dilemma. And it will be interesting to talk about this a little bit now as well. Do you think the risk of integrating Web3 actually outweighs the rewards for large players? And maybe that could be also, a challenge for the adoption in general, because the bigger players are kind of cautious. I see that a lot in fashion industry, although they're really excited, everyone, like to be in blockchain, but they're kind of like very cautious to dive deeper. So yeah, it would be great to know your opinion.
I think there's a saying, it says, the early bird gets the worm, but the second mouse gets the cheese. And so like if you're going for the cheese, you have to wait and watch and see what works and let the early players make the mistakes. When I spoke to a lot of big gaming companies, I won't name them, but people who are into gaming, they know who they are, right? All the biggest sort of gaming publishers in the world by market cap. For those guys, yes, it's a big risk. And like, I won't even call it the innovator's dilemma. It's almost like when they look at sort of the additional benefit from secondary sales and selling NFTs and bringing in that community and imagining a secondary marketplace where items are being traded, and they compare that and they sort of contrast that with the risk, which is like smart contract risk, regulatory risk, customer churn from people who hate NFTs. Gamers, by the way, they hate NFTs the most in this whole world, which is, again, like it's so surprising because, they're meant for you to own your items, which you're already paying like thousands of dollars for a year, right? Get some of that money back. Like, why would, but I think it's not the gamer's fault. It's the fault of the gaming studios that have come out in the past 2 years and like the perception of the blockchain and sort of the frauds in the space. Because, at any sort of major shift in monetization models in gaming, there's always backlash. So when you went from like arcade to console, there was some backlash. When you went from console to free to play, there was some backlash. When you went from like free to play to like mobile, there was some backlash. So I think now that we're going to sort of like blockchain enabled free to play or like sort of blockchain enabled free to own, call it, there will be backlash as well. So I think the big players will definitely take their sweet time. They are in no rush. Their current models are working. They are making lots of money on those current models. And I think that over time, as one Web3 studio really takes off, or like just one Web3 game shows what it can mean to sort of create good monetization opportunities, I think every major Web2 studio will just copy that model. Because unlike sort of tech, unlike AI, unlike space science, etc., like you don't need to iterate aggressively in gaming. You just need to see what works, and you got to, just make sure you have enough marketing resources to get enough gamers out there, right? And so I think gaming is very unique in that sense. But obviously, for other sort of areas of blockchain, like DeFi, you can already see CeFi players moving in, and like major sort of big financial institutions like Fidelity offering ETFs and things like that. So I think that's a different story.
Yeah, absolutely. Yeah, it's interesting to see how this will develop. And yeah, I stay optimistic and positive. I guess we just need a little bit more time until all the tools are perfected. And that's why all the investors, I believe, kind of looking into infrastructure these days, because this is what is lacking in the ecosystem, I guess.
Yeah, I will say the audience should take my word with a grain of salt, because I do get paid to be an optimist. So I am a little bit biased there.
Let's go into the final question, because it's interesting to know you've been in the industry for a while now and you have so much experience. So it would be great to know your insights, or if you have any advice for our founders, game developers, and investors who are listening. How do you see the future of Web3 and metaverse evolving in the next years, even in 2023? Or beyond, and what opportunities or challenges will be there?
Yeah, I think like I'll break down the advice first for founders and then for like investors kind of, as I think about sort of the opportunities and challenges. I think like maybe like 2 years ago when, venture funding was flowing into the space freely and like talent was flowing into the space freely, the space seemed much larger than it really was. And I think there was a lot of, rehypothecation of funds and a lot of, commingling of assets, a lot of like sort of leverage in the system, right? Which made it seem like, the TVL and the revenues are much higher than they actually should have been in a normal environment. So I think like when I look at the space and I look at what crypto means to me, it can mean different things to different people. But like the way I think about it is that crypto is really a new form of financial and ownership stack of the internet, right? And so it's a small extension of the internet, but the market size is not the internet, right? The internet has AI, the internet has social, the internet has a lot of like media, right? Content, platforms. So I think like just like one of those verticals of the internet, crypto is a vertical of the internet that deals with like financial transactions and the ownership stack of how we sort of transact on a day-to-day basis. And so I think like when I tell founders to like look at the space, especially new founders coming from Web2 who are experienced, they should really go back to like what crypto is. And like when they think about building things on the blockchain, like if there's no need to build it on the blockchain, you shouldn't build it on the blockchain, because building on the blockchain is like a very cumbersome and very time consuming and a very like unnecessary task. Obviously a centralized database like MongoDB is going to be 10 times faster than any blockchain, right? So you have to really ask yourself, like what you're building, is the blockchain needed really? Or is it one of those things where you might think it's needed, but you've not validated any of that by like talking to the real customers? Because that's what ends up happening in crypto. A lot of things get built and never used. Like they're in the warehouse for ages because consumers don't care. They don't want decentralization. They care about like good execution, transparency, good prices, good fees, good UI UX. So my advice to founders is that if you think you can build novel applications that utilize the blockchain while preserving all of the principles I mentioned, I think talk to me. But I think outside of that, there's opportunity everywhere. And I think the good thing about the next 2 years is going to be that in a bear market, only the real tangible ideas float to the top. And like a lot of the sort of noise gets washed out. Not all of it, but a lot of it. There'll always be sort of gimmicks in the space. So that's what I'll say from the founder's perspective. From an investor's perspective, I think a lot of people who used to be in crypto a lot of VCs have pivoted to AI, right? We are crypto native. We are sticking to crypto. That's what we believe in. That's what we believe will be the fastest growing asset class in this world in the next 10 years, at least internally. That's my belief. It's not Pantera's. And I think that like, having a niche to focus on really does help differentiate you. And, both as an investor, as a builder, but just as a personality, right? I think like we are continuing our focus on crypto, sort of, getting the chops in to learn more about the space, expanding our worldview of like what it means to sort of build using crypto beyond the sort of DeFi, CeFi trading, speculative apps that we've seen, and into more sort of like non-speculative use cases that, sort of eat up TradFi and take more share from TradFi. For crypto investors specifically, I think to paint a picture of how early we are, I think like the world as a whole in TradFi, we settle, trillions of dollars of, transaction volume and loans per day. And I think DeFi is still at about $100 billion TVL. So I think like if you think about the asymmetry there, it's the most exciting asset class to me, just for that reason.
Yeah, great. Well, thank you so much, Siraj, for your time and for joining us today. It was really great to hear all your insights and, all your knowledge. Thank you for sharing it with us.
Awesome. Thanks so much, Marina. Thanks for having me.
Yeah, and I would love to say thank you to our listeners for being a part of today's forum. You can get involved in our community by following us on our Twitter or Discord, and you can check more information about Newforum and New Foundation on our website, which will be in the description.